Good afternoon and welcome back. You're watching Business Arena here on 2VP World. I am your host, Aleksandra Marchewicz, and these are the latest business headlines. TVN, one of Poland's most prominent private broadcasters, is up for sale, with at least 3 offers now on the table. The decision to sell comes at its current owner, the US-based Warner Bros. Discovery, seeks to streamline operations. According to reports in the Polish media, the offers were tabled by a consortium led by Wirtualna Polska, the owner of one of the biggest news websites in Poland. Michał Sołowow, one of the richest Poles, and Media for Europe, formerly known as Mediaset, linked to the Berlusconi family. The initial offers will now be reviewed by JP Morgan, an investment bank which has an advisory role in the sale. The bank will choose which offers will make it to the second phase, during which the bidders will be granted detailed access to TVN's financials and operations. The Polish government included TVN on a list of strategic national assets last year. The sale is valued at about $1 billion. The Polish manufacturing sector is still experiencing a contraction, but there is a lot of optimism going forward. These are the main conclusions after today's readout of the PMI index, which gauges the sentiment among the manufacturing community.
Close, but no cigar. January's Purchasing Managers Index, or PMI, for Poland stood at 48.8, below the 50-point threshold, which means the manufacturing sector is still contracting. What's worse, it's the 33rd consecutive month of such readings. But the pace of this contraction is clearly slowing, and there's a lot of optimism blowing in from the West.
The message is clear. The worst in the case of industry is over.
The last time Poland saw its PMI figure above 50 was in May of 2022. But as Trevor Bolshan, economics director at S&P Global Market Intelligence, points out, over the past 2 months, the Future Output Index has risen by over 10 points. That's the largest 2-month gain in years, excluding the pandemic year. Now, this optimism isn't coming out of thin air. It's confirmed by figures coming out of the Eurozone. The Eurozone manufacturing PMI is at an 8-month high. What's more, Europe's biggest economic engines are also on almost year-long highs. Now, these figures are expected to continue rising as the year progresses, as there are many other indicators signaling sunnier days ahead.
The relatively bright spot is actually consumer demand in either Poland and other European countries. Inflation fell down, and right now we see a viable increase in the real wages of the household, in the real incomes. This translates into a higher consumption.
More demand in Europe's largest economies will provide Poland with the boost it needs. So, when can we expect to see Poland punch through the 50-point threshold?
I would expect the expansion of industry, so the increase of this indicator above 50 in the summer, probably the months like May, June.
Poland's GDP growth for 2024 surprised on the upside at 2.9%, and things are looking up for 2025.
Improving sentiment among manufacturing companies bodes well for the Polish economy because it raises the probability of investments picking up. And investments are what Polish economy sorely needs. On the bottom line, after the news, we're going to talk about another avenue for spurring investments, improving capital markets. So stay tuned for that. The Ukrainian government is advertising the country's vast natural gas infrastructure as the perfect storage for the fuel for the European customers. Decision makers in Kyiv have been promoting this capacity to countries with significant LNG import capabilities.
31 billion cubic meters, or twice as much as Poland consumes annually. That's the total storage capacity of natural gas Ukraine has on offer. That's why Ukrainian Prime Minister Denis Shmyhal is confident that Ukraine, in partnership with Croatia, can play a key role in strengthening the EU's energy security.
Cooperation in energy sphere, so synergy. You have LNG Kirk terminal. We have the biggest on European continent storages for gas, and we may combine this.
This plan is facilitated by the ongoing expansion of the floating LNG terminal located off the coast of Croatia's Kirk Island, which will increase its annual regasification capacity from 2.6 to 6.1 billion cubic meters. The US LNG it processes is connected to the grids of several countries, including Hungary, which could jump at the chance to diversify its supply and become a key transit hub for Eastern Europe.
Hungary should grab this as an opportunity for the future, as to position itself as a key gas trader instead of relying solely on one supplier.
In recent years, the EU has been expanding its liquefied natural gas capacity, which experts now believe is sufficient enough to replace Russian gas supplies.
There is enough natural gas to compete with the Russian volumes in the region. And as I mentioned in the beginning, Poland, Croatia, and Greece, in particular the Three Seas countries, should cooperate to kind of bundle volumes to create a common demand.
But Russia doesn't want to be cut off from what was once its biggest buyer and has been dumping gas on the EU market at discounted prices. The issue, according to Vladimirov, could be resolved by imposing tariffs. If Russian and EU gas prices were aligned, the incentive to buy the Russian commodity would disappear.
Poland now has Europe's 7th highest minimum wage when purchasing power standard is taken into account, according to Eurostat. Leaving Romania, Croatia and Lithuania behind, Poland is treading on the heels of France.
Watch out, Western Europe. Poland is closing in. Poland's minimum wage this year is 1,100 euros. When costs of living are taken under consideration, that's only 500 euros less than the next highest country on the list, France. So, good for the employees. But what about businesses?
Now, zloty is appreciating, and therefore the Polish labor starts to be expensive. This probably will be a problem for low value added sectors.
All in all, Poland's job market remains appealing to investors.
From the investors, this is still absolutely a great market to enter because you have quite motivated employees, and Poland is still absolutely famous for some skills. So we can be proud of information technology, healthcare, financial expertise, language proficiency.
In mid-2024, the IMF sent Poland a warning that the country might be increasing its minimum wage too quickly. Polish enterprises have been reporting that the labor costs eat up the biggest share of their revenue, according to research by the think tank Polish Economic Institute. At the same time, the country has suffered a couple of high-profile closures, with companies relocating production to lower-cost jurisdictions in sectors as diverse as clothing production, tire manufacturing, and home appliances.
Those who made their investments over here will not stop doing that because it would mean a massive change for them.
Polish Prime Minister Donald Tusk has already announced that minimum wage hikes will amount to little more than the inflation rate.
And that is all for our business news updates for today. But for more business stories, check out tvpwl.com. Now, join us for a conversation that Mary Cato had last week at the European Capital Markets Forum in Warsaw with Rosa Armesto-Placha, Director General of the Federation of European Stock Exchanges, about how to develop capital markets in Europe and make them work for the economy better.